going on? It's Ryan here, CEO and head quant at happytrader.io. Today we're going to do a Bitcoin CME futures backtest 4-hour time frame. We're going to take the long and the short. So let's just show you what that looks like. And let's go to the chart, taking our uptrend and our downtrend signals directly from our indicator, Sentiment AI with the Luma trend, and then, basically buying on the uptrend signal and selling on the downtrend signal, but then also taking a position short after we cover the long, right? So that's the long and short. We're going long the market, so market up. We're going short the market down. So that's going to be our first back test. Our second back test is going to be the long only, but let's start with the long and the short. We're going to be using a small account size using the CME futures. So we're going to pull up our strategy tester and we're going to go ahead and just confirm a couple parameters. We're going to do a smaller account size than this. We're going to do just $1,000, one contract, no pyramiding, so no orders in the same direction. So let's go ahead and just hit OK. And we see that we have a really, really impressive overview. And it actually has me taken back a little bit. And it's not because of the 20,000% gain just from 2017 to 2024 using $1,000 of starting capital. It's the fact of, for me, it's a combination, being a quant and all, of the low win rate combined with no drawdown and then a very small number of trades. And then, what else is crazy is that we're using the 4-hour swing trading chart and we have an average number of bars in trade at 57, right? So 57 4-hour bars, right? For each trade, right? So really, this isn't something where you have to be sitting in front of, the computer all day long for, the better part of a decade. All you have to do is set your alerts in Happy Trader, and you can just set an alert on that 4-hour time frame for your Sentiment AI buy or sell signals, or your buy and sell signals if you want to be tipped off to a potential trend reversal with these sell and buy signals. So that's what stands out most to me about this back test. Now, no drawdown is crazy as far as overall capital drawdown. But there were drawdowns, but we kept above water. Now, would someone have maybe delta hedged or taken profit in some of these zones? Of course, but we're just doing a back test, right? This is theoretical back testing, but it's using real data and it's using real trades as far as, calculating precisely what the trade would have been. And we have a full trade log right here. And it's just crazy that it's only 157 trades, but you can see one thing to be really aware of is win rate being below 1 out of 3 trades. Well, doesn't seem to affect our expectancy, right? So win rate does not matter, which is something I talk about in other videos. Like and subscribe. And we are a startup, so that would be much appreciated. But the fact that we have, only 156 trades is just absolutely bonkers to me, right? So list of trades here. You can see that, kind of circling back to the win rate, you can see our winners are just significantly bigger than the losers, right? So, especially as we get, up in size here and we start gaining on the portfolio, you can really see, some of these swing trades are just absolutely bonkers. And what else is really interesting about this that I'm just seeing now and just caught my eye is, look, even on the losing trades, there's these huge run-ups here, so that's something to be noted. To have a $36,000 run-up, but lose, 5,400, like that ratio of run-up to profit, or loss in this case, it's just in the profit column, is pretty cool, because what that means is you had a lot of opportunities to take that trade off of the table. So let's go ahead now and change. Let's take one more look before we change. Okay, so we have 20,000%. Okay, so that's for the long and the short. And let's go ahead and deactivate that. You can see it superimposes itself directly over our uptrend and downtrend signals. So we're going to hide that. We're going to activate the long only and then just go to the chart. And this one's a lot more simple. So, assets, they tend to go up over time. So anything that's considered investment grade, which as of today, January 11th, 2024, we did get an approval for the Bitcoin ETF. Things tend to drift upward, but let's see if the back test looks better than our other back test, right? So 20,000%, we're going to toggle that off, and then we're going to go into our strategy tester for long. We're going to use the same exact time frame, but we are going to set the parameters also to be same exact. We're going to use just that one contract with $1,000 of initial capital, assuming we're delta hedging. We're using some sort of hedge if our trade goes underwater. Otherwise, you would need more initial capital, at least a couple grand for your initial for your, not just for your broker margin, but for potential drawdowns. Otherwise, you're going to get a margin call from your broker. So we're going to do no pyramiding, so no successive orders. Same exact thing. There goes the bell, and we are going to hit OK and generate that report. And okay, so that's not terrible. This is interesting. Okay, so for the long only, 14,000%, but about like half the trades, which makes sense, right? So you still had a similar looking graph, kind of flattish, boom, upward, and then a cavernous drawdown. But the drawdown wasn't as sharp on the long only. You had average bars in trade, 58 4-hour bars. This is a very low management trade. So pretty much anybody could kind of do this trade because these signals just aren't happening that often. You can see just the distance between some of these signals, right? So that's pretty crazy stuff. So let's hop back in. Now, there was a little bit of a drawdown here, and you can see it, it got to, probably about, it looks like negative 700. So yeah, you would have got margin called for $700. Big whoop. If you hedged your position, that wouldn't be the case. If you had a couple extra grand in the account and you just go short correlated assets, there's other videos that we do about that. But we're going to stay on topic. But look, the average trade, 1,900, 3.51% on the long only. So, what this looks like to me is just assets that go up over the long term. They require less management. If you're trying to go long and short the market, this might apply for potential equity markets, futures markets, NASDAQ, stuff like that, S&P 500 ES futures, all that stuff. If you don't know what I'm talking about, I apologize. I'm a quant. But that would be just the normal stock market compared to something as volatile as Bitcoin. But this is really low management, and just 14,000% is just super impressive. Now you can see the percent profitable is a little bit higher. It's a little over 1 out of 3 trades won. And if we go to the list of the trades, you can just see these big whoppers for our winning trades here in the white, and then our losing trades are going to be significantly smaller, which is why our percent profitable percentage doesn't really matter in the context of Bitcoin, the all-time CME backtest using the 4-hour chart. So overall, I like the look of this. The gains are less, but I mean, come on, it kind of speaks for itself, right? And if you look at the performance summary, just starting with that initial capital and the amount of notional value you're kind of slinging around, to have this kind of just graph is just really a testament. And you know what? One other thing I have to mention is, this is just a backtest of going rudimentary from uptrend to downtrend. Very simple. Most traders are going to take profit before you get to the next signal. Now, let's go back and kind of connect that concept by looking at the list of trades one more time, and then we're going to end the video. So you can see that on a lot of these drawdowns, if you go signal to signal, and a lot of these losing trades, you can see the losing trades are much smaller than the winning trades, first off, hence the positive expectancy. Well, on a lot of these losers, you still had a chance to get out at a profit. Look at the run-up on some of these losers, right? So $6,000 loser just going signal to signal, but you had a run-up and a chance to get out of that trade. And then look, there's some that are very asymmetrical, like $7,800. So that's a lot of chances to get out of a trade. And, with a negative 825 drawdown to the account, not that bad, right? And then even for an $8,100 drawdown, you got to realize when you're trading futures, it's highly leveraged. So if you're not, comfortable with these numbers, don't go into this kind of thing blindly. And again, this is not financial advice. This is just a back test. And you can see that we're just getting, these crazy run-ups. So we have opportunities even on the losers. And that right there, my friends, is what makes happytrader.io so incredibly potent for all asset classes. My name's Ryan, the CEO and head quant here at happytrader.io. Have a great day and happy trading.